In this video, I'm going to explain how the simple system works. This simple strategy is very easy to use, guys. This strategy, everyone can use it, even a beginner can use it. You can see it has got signals. As you can see, we have the sell signals, we have the buy signals, etc. So guys, when you're using this simple system, always trade according to the trend. Don't be that type of a person that says, I only trade spikes or I only trade ticks. You can trade everything, but what matters the most is closing your trade in profit. So avoid trying to to trade spikes when the market is bearish. For instance, this is a gain pair. If you check on this gain index, we can see that our market is bearish. So we can't try to catch spikes here because what will happen next? We will end up closing our trade in loss. So avoid that kind of uh mindset. So if you want to trade using this simple system, just to follow whatever it is telling you. For instance, now we can see our market is bearish, but we cannot enter our sale now. Why? Because I think it's now too late. It has reached this zone where there's a lot of resistance. So in case you are trying to catch a spike, what you do is you have to wait for it to create something like this, something that will show you and give you more confidence that spikes are going to come more. So we need to take note of that. Then in the event you want to trade ticks, you need to note that again. Uh, if you want to know that the spikes are not going to come, you need to check your overall trend on your hourly time frame. So I'm going to check our hourly time frame and let me show you the hourly time frame, guys, so that you can see how this thing works. So here we've opened our hourly time frame and just take a look on the overall trend. This is how you see the overall trend. On the overall trend, we can also see that the market is bearish. And our last signal on H1 is the sell entry, which means our market is bearish. So we can't try to enter a buy setup here. But if you want to enter a buy setup, you need to wait for the market to turn, then give you a buy entry on H1. Once it has done that, that is when you start looking for buy opportunities on the smaller time frames. So when you get the buying opportunities, that is when you enter your trade. So here we can also see that this simple system generates these red lines and blue lines. The red lines are there to show you that there is resistance that can make the trade go up. Then the blue lines show us that there is the resistance that can make the trade go down. So whenever you are trading, you need to take note of those lines. They'll be generated automatically. Then we also have these blue and yellow zones. The blue zones, they show us the area where the market um is going to go up. Then the yellow where the market is most likely to go down. So let's say you've received your signal on your hourly time frame like this. This is our sell entry, right? So you now have to go on to your M5. On M5, this is where you're going to get your signal M5 and M1. So we want to look at that entry so that we see whether it's wiser for us to enter that trade. I'm going to show you. So this is where we got our sell entry, guys. But in a nutshell, most of us wouldn't be able to enter this kind of a sell entry. Why do I say so? Because our market was still bullish. As you can see, the market was still going down. So if you want to know that the channel has changed, the market has to cross in a zone where there is resistance. So we can see here the market tried to sell, then went up, tried to sell, went up. So in a nutshell, this area has got a lot of resistance, right? So if you want to try that kind of a trade, you need to first check for a very good order block. So we want to see whether there was an order block around that zone. So we can see this one. This is the most visible order block we can see now. So it means the chance for the market to turn was very high. So what you do is you wait. Then you see that the market goes up like this. Then it turns around this zone. Then goes down, goes up, turns around this zone again. You now say that our market is failing to cross this zone. So it means we are now trying to get our chance to enter our sale on gain 600. So what you do is you wait for the market to do its movement like this. What happened now? It tried to move, right? But it did not cross this zone. Then it crossed this zone again, trying to reach out this zone, and we can all have confidence that the market can drop. So once it reaches this zone, right, you now wait for a small spike. Here, this is where we get our small spike. Then we enter our sell position here. You trade, you trade, you trade. It will give you another retracement to that zone to confirm that that zone that the market can go down. Then you add your positions and hold your trade. Then around this blue line, I told you spikes will come, so you need to be very careful. Then if you want to know an obvious trade, once it start to go down like this, you wait for a flag. This is our flag. As you can see, the market was dropping, then it created this flag. So you enter here, then you enjoy all of these profits. Usually it will drop until it reaches this node. This is where we are seeing our TP. This is our TP. But as for me, I prefer using this red line because usually when it's about to reach that red line, it will be giving you spikes. And as you can see, it is just spiked. Let me show you on M1 so that you can see that it spiked on that line, guys. Right. So here, this is how it spiked, guys. Just take a look. This is the spike, and as you can see, a signal was given. So in the event that you want to catch spikes, avoid trying to catch spikes on this turning point. Wait for a very good setup, for a very good confirmation before you do anything. Once you have received a very good confirmation, and once this line turns green, that is when you can start to catch spikes when the market is now going up. So in the event that you want to trade the pain indices. Pain indices is for now, I prefer trading spikes because as you can see now, you have to confirm with a lot of setups. Here we have this kind of a setup. You can see that now it has reached the top zone, so we are expecting a spike. Now it's about to reach that blue line. We are expecting a spike, but now it's about to reach this area of the zone. Then here there's a shoulder. So around this point, from this blue line to this blue line, a spike is most likely to come. So what you do is you can try to catch a spike here, then you start entering your sell position, but you need to take note that the market will not continue to spike. Why do I say so? Because we are still waiting for the market to cross this zone. When it crosses this zone, that is when you can start to say the the market is now going down or there's a change in character. But for now, we can say the market is still bullish, but you can also catch spikes along the way. But it's very risky to enter that kind of a setup. So you have to wait for the market to give you a bearish setup so that you can get obvious trade. So this kind of illustration, you can also apply it on deriv, even if you're trading booming crash or volatilities. So always take note of that. This is how you trade using our simple system. So if you want to try it out, just like this video and send a message on WhatsApp using the number that is on our description, or you can just join our Telegram channel, then we trade together.